Hey everybody, good morning. Morning, Florencia, Michael, Philip, Goose, Dex, Sergio, Wabar, Don, David, Arturo, Michael, Francois, David, Mary, Herb, Ray, JB, John, Goose. Good morning, Nikki, Svenborn. Hey everybody, if you want to chat with me like these fine folks, and looks like when I was recording something, I turned off my green screen. Turn that back on. There we go. And click the button right over here where the monster can is, and you can be a subscriber and then chat on the live stream. So welcome everybody. And let's see. Different 5 traders. Yeah. What's it gonna bring indeed, Philip? So anyway, I think I got all caught up in the. Yeah, I'm gonna. Goose, I got a chart up here. Let's see. I'll just go ahead and hit it. I pulled it up right before I started. We were talking about this. Look, right here. Monthly supply of houses in the United States, MSACSR. Shows up on monthly because it's a monthly chart. This is interesting. I feel like this is interesting. Look, we had a peak, and we're hanging out right here. So this is 7.8 months roughly of houses supply available to buy. So if everything stopped, then we'd have 7.8 months of the current rate purchasing worth of supply sitting on the market. So interesting right there. I think if you want to put this on one of your lists, it's MSA CSR. It's the monthly supply of housing in the United States. And then we also have not that one. I have a housing one right here somewhere. Yeah, CUS1 exclamation point. This is CME Housing Futures. So look at that. We made a higher peak, but we didn't hit the 1272 yet. So we didn't turn down at the 618. It looked like we were. We didn't do it. So that's off the table. We made a higher high now. But this thing's probably going to top out. I mean, look. We haven't had a pullback for a while. We could extend all the way up to like 350 on the CME housing futures, but hadn't been down to the roadmap line in a few days, few years even. So, hey Jeff, hold on, I'll talk about it in just a second. So, just wanted to throw that up there, and hey, we don't have to get a 3% correction. Let's just get that out of the way right now. But look right here. $3.1 trillion of OPEX. Jeff, you just go all along and come back and talk to me when we do get a correction. So, anyway, that's a long bull run in CUS1. That's, So, Goose, maybe not today, maybe not tomorrow, but get ready, my man. Anyway, they can keep being irrational. I mean, all this stuff can just keep being irrational. So, there we go. All right, 3.1 trillion. This is a record, and this is just SPX, SPY. Yeah. We are so close to everything I have is flashing danger. All right, this is like unsustainable. Everybody's like, "Oh, we're not going to correct. Oh, we're going higher." Oh, I mean, I keep hearing it, and guess what? Once everybody's complacent, once everybody's sucked in sufficiently, I mean, look where we stopped. Look where we stopped. Right on the money. I don't think we're going straight up here. I don't think we do it. It's my experience. We're not, I never set a date on when we're rolling. So, I mean, there's lots of catalysts this week. Catalyst went higher, pushed us higher. It's I went searching for a move like this on the candles. When we look at the candles right here, When's the last time we did something like that? Not really ever. At least not with VIX this low. I mean, even back here was choppier. So where is one of these that looks kind of like the one we just did, where we didn't even pull back at all? 16% straight up. Well, there's one, kind of. And it went right back down. How much did that one roll? About 5%. And then we popped right into the all-time high. Probably don't remember that one, do you? That one was straight up, same time of year. Look at that. October into November. Let's see. Find another one. And that one's kind of similar. It was in March. And we got about a 4% pullback. Well, there's a nice, look at that one. That looks a lot like what we did, right? That was in July 2020, coming out of COVID. That one got a 10% correction. And rolling on back. Looking for something. Oh, there's one. Gosh, that one chugged from November right up through late January. Could we be doing that one? Yeah, we could. Get that straight up right there. I mean, you could even say it started back here, but that was really the epic run. Started mid-November. You could even go back to, into October maybe. So what did that one do? 11%, almost 12%. So I'm not saying that we're not going to keep going through January. We could get crazier. We could hit the 1618. I mean, definitely could. Could keep popping. All right. So, but the higher we go, the longer we go, the bigger this is gonna it's gonna be much bigger than 3 to 5%. It's probably statistically looking at those 10 to 15% pullback. So I would rather get a 3 to 5 now. For me, I mean, but since when does the market ever do what I want it to do? I mean, never. Just have to trade the market you got. So is the market always rolling on like 3-dimensional chess here? So be careful. All right, be careful. Be careful. Be careful. This thing's gonna be crazy. Anyway, all trading involves a substantial risk of loss. All right, past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. It's not a recommendation to do anything. All right, except take care of your money. Don't buy or sell any financial instruments. Don't buy or sell any stuff from gurus. Don't buy stocks. Don't buy options. Don't buy forex. Don't buy futures. Don't buy cryptos. Don't buy bonds. Don't long them. Don't short them. If you desire personal financial advice, you got to hire and consult a financial advisor who has a fiduciary duty to take care of you. That's not me. I don't give you advice. I'm just sharing what I see. All right. I'm positioned kind of neutral right now. I got some long stuff. I got some short stuff. I'm kind of heavy on crypto because we've got the spot ETFs potentially going to get approved in the next month. And if they don't, then it's going to be a lawsuit and it's going to be crazy. And then we've got Bitcoin halving. So, I mean, I'm kind of long crypto because, well, the pattern says, 4 times in the past, it doesn't have some long 100-year history. It just has, 2009, not even a 20-year history. So, but the history we've got says that every 4 years or so, we get an epic run based on the halving cycle of Bitcoin. Bitcoin was the OG, as they call it, the original. See, the whole cryptoverse kind of follows that. And now Bitcoin itself is in the top 10 of assets worldwide. You know, if you think it's a farce and it's going away, I mean, it's one heck of a Ponzi if it made it to the top 10. Anyway, yeah, the CTAs for next week. Let me see if I threw that into my Discord channel where I can pull it up real quick. And right here it is. Let's see. And they're now a sell in every scenario for next week. Right there, the chart for it. This was this week's chart. I mean, not this week's, September 11th, June, December, you know. And I was looking for the one that's this week's. Can't find it. Awesome. So back then they had it, you know, kind of buying, but now we're flattening her out here. Big sells. That's a dip before we pop a little bit. Here we are, right there. That's a dip going into the end of the year on every scenario. So that's the big up. The 2 standard deviation up is a dip. The 1 standard deviation up is a dip. The flat market rate is a dip. The down 1 standard deviation is a pretty big sell into January. And the down 2 standard deviations is a really big sell, almost going down to the levels we were in November. Right there. So if we start down, we could start down a lot. All right, any questions? There you go. That is a Zero Hedge Premium articles where I sourced that from. They pull in the reports from the banks, the trading desks. All right. Where are we going now? Next calendar. We have, let me refresh. We got it. We got the Empire State Manufacturing down pretty big. We were expecting kind of a positive. Got a big negative. That's who could have guessed that one, right? It is coming back up though. Look, I mean, we've kind of passed the peak, slowly coming back up. But big shocker on the monthly there. Expecting a positive and got a big negative. So caution. That's creating a little bit of flash in the market all of a sudden this morning. Then we have PMI coming out here about 9:45, about 18 minutes. If you're watching this later, it probably already came out. If you're watching this live with me, about 18 minutes. We'll see these come out. This could create some more volatility. That's why they're red numbers. We're seeing some capacity utilization come in light. Industrial production come in light. Empire State Manufacturing come in big surprise down. Yeah. In case you didn't notice, they're putting lipstick on the pig, basically. I mean, that's, we all know they're lying, but when do the lights come on at the bar? I think it's after we get to the new all-time high, and that's when the real, you know, when the real party ends, when the cops bust in and, you know, break up the underage party. So be careful, all right? Be careful. And that's all analogies. So where are we at today? What do we got to pay attention to, right? Where do we pay attention to today? So that was an epic pop right to, I mean, it's all coming together, all right? We were 70% likely to spike that 47.40 level on the candle chart. You know, the simplified chart, we closed right on the money. I mean, that couldn't ask for any more. 47.18 was level. 47.19 was where we closed. I got dang close. I mean, I thought we'd pull back, but once we bounced off of that 3-day roadmap line, I said 70% likely we're going to tag that 47.18. We did it. I mean, VIX is pretty cheap. I've got a nice stash of it out to February at this point. I'm hoping February's long enough. March might be a better option at this point. Get it? Option. And I'll throw this out there. Yesterday on gold, I actually I flew out as far as I could on gold yesterday. Went out to January 2026, bought some leaps at 300. Put about an ounce of gold's worth of money onto those leaps because that looks kind of bullish, actually. And we might go on, this might actually rip way higher. We held that zone and bounced up. So I was like, I'm going to throw an ounce of gold's worth of money onto some $300 calls. Like, so $300, right now we look at, this is hanging out 2050, right? GLD. I bought GLD calls, not GC calls. I bought GLD calls 300. So we're running 6%, roughly 6% under being divided by 10. How do you do that math, JT? Well, take 2050 and take 180, move your decimal over 1884.60. Subtract that, do a little math. It's roughly 6.5% that we're running underneath gold. So if this thing goes on some sort of epic rally, like, gosh, I mean, we could be talking 5,000. If it went really stupid, like $10,000 an ounce, I mean, we'd be talking like, this stuff would be getting like that. We'd be talking 400 on GLD. Maybe 500 or 600 on GLD. I mean, that would be stupid, right? So that's why a $300 call. I mean, hey, it's a gamble. Yeah. Could I lose all my money? Yeah, I could. So I thought it was worth a shot. If we get a big pop, I'll probably liquidate it and look for a new spot. So there you go. Look at this. I said S5FI was going higher. Probably gonna make a higher high. Well, we got the higher high. Now the stage is set for this correction. All the pieces all the little things I've said have now come true here. So that was January 2026. Yeah, 2 years plus a month. The longest leap you can buy. So there you go. When does the music stop on this rally? Well, not much left on this one. Could we hit 100? It's possible. That would be 100% of the S&P 500 stocks above their 50-day moving average. Unlikely. We could do it. And if we do, you got nowhere to go but down. And in fact, we don't hang out over 80 very long, so I find it very prudent to be careful with your money. Very prudent. Be careful. Don't come crying to me if we pull back. That I didn't warn you we're about to pull back. Now, could we FOMO rally more? Sure. Didn't get the pullback? Yeah. Could the pullback be bigger if we do that? Yeah. Could be a lot bigger. So be careful. Be careful, be careful, be careful. I have to, I'm speaking to a lot of people when I do these videos. You got to, I can't give you specific advice, but the generalized advice is be careful. This thing is going to roll over, all right? If you need specific advice, remember, you got to hire and consult a financial advisor, all right? That's not me. You can say I'm wrong if you want to. I pretty much drew this giant big arrow on the chart and said 47.18 for all the way back when we were over here in October. And, as we came through the bottom, once we got above that key resistance, 70% likely. And we tagged it. It's the same pattern, 3-day or not. Russell, look at that craziness go. That's one that's been wild, like beyond my expectations right there. Crazy move. That one has been straight freaking up. One little pullback in here. I mean, you could almost say that's 1, 2, 3, 4, 5, maybe. That one's gonna pull back at some point too. How big? Not sure at this point. You know, we could come back to the roadmap line very easily. We could just get a small correction, hold above some of the stuff over here. We've done a lot of stuff in Russell, and let's start removing some of the drawings to help speed this thing up. So that's small caps, that's IWM. If you want to know how to trade it, we're right up to that resistance. We've been there once, twice, 3 times. This is the 4th time in just over a year. And really, if you want to count it, I mean, look, we had a lot of trouble over there. So almost 2 years we've been finding resistance in this area, or support. You know, this was support, and this, you know, now resistance, 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 resistance. If we get above here, we're probably going to go on up. And we didn't do the bearish case, so save the day there. Didn't flush it. That was the lowest low. This is the first move up. Probably get a retrace, and then if we hold something in here, that would be the time to load up, because we'll probably go up big. Yeah, TNA, not a bad idea. Oil, turn in the bottom, potentially. Still finding some resistance there. Now, here's the, what if oil rallies all of a sudden up to 80, 90, 100, causes a bunch of inflation? What happens to the Fed's plan then? Just think about it. Consider the scenario here. If oil breaks out and goes, which it looks like it has a somewhat of a bullish chart, actually. We zoom out. We came down, did a big long correction from March of 22 through May of 23. We made an initial move up. Like I was, you know, this is like ahead of the Russell here. We made an initial move up. We did a big deep retrace, holding a higher low. If this is the low and we don't break down lower than back here, it's still potential. With how deep we came, if we start breaking higher, this thing can go way up here. I mean, we're talking 100, 120, 140, 150, all possible levels. That's going to create some kind of crazy inflation numbers, the way they measure everything, because everything is going to get way more expensive again. Even more than we've already seen. It's kind of like a spiral, you know, circular firing squad situation. Oil gets more expensive, everything gets more expensive. Everything we touch rides on oil. It's going to wreck their plan for cutting rates next year. All circles back to potentially we hang sideways, which is pretty much what we're doing, and then it potentially starts running again. And right now, interest rate pulling back, but what if it starts getting spicy again? What if indeed? Keep an eye on this one. I'll keep pulling it up. You don't have to keep an eye on it. I'll keep an eye on it for you and keep coming back. Make sure you're subscribed. Make sure you click the bell with the notifications so you know when I go live and talk about this stuff. You know, check in once a week. You don't have to watch me every day. I appreciate it. And, you know, remember, anything I say is beneficial. Make sure you give me a thumbs up, interact with the video. It's helpful, you know. Thank you for watching. So, circling on down, gold. We talked about it. I'm long. BTC, holding the channel so far. We break into the channel. Watch out. We're going to get a deeper retrace. Right there. We tried to pull away yesterday, came right back down to it today. It's not showing ultimate strength. We may break into the channel and get the retrace. Bottom of the channel right now, hanging out at about 39.9. If we get below that, we're probably going to come back down to this area around 35, 36, and then maybe retrace deeper down to this 33, 32 area down in here. So if we get below that zone right in there, if we get below there, watch out for this. All right. Now, could this thing go straight effing crazy when a spot ETF gets approved? Yeah, it could. It could pop, make a new all-time high, and then pull back into the halving. All right. I'm saying the same things all the time. Just, you know, I reserve the rights to change as we have new information every day. Can't stick to the guns. You know, you gotta keep updating your charts. You can't just sit there and go, well, I thought S&P was gonna correct and it didn't, so we're just gonna stay short. No, remember, it's not being wrong that costs you money. It's staying wrong. I'm not super short. I have some positions on. They're gonna be profitable if S&P pulls back. I have a lot of positions on that are gonna be profitable if we keep grinding higher. Strike a balance. All right, protect yourself. I have protection on, not I'm short. I'm sorry if anybody misconstrued anything I've said. I take like a little bit of my money and put it as protection. I take some of my profit. I'm like, you know, I just made $7,000 on that play. I'm gonna take about $2,000 of it and put it on just in case the market flushes down the toilet. And then I take the whole rest of my account and trade accordingly, which is a lot of cash right now. Just kind of sitting waiting. I don't think we're high probability to go higher. I don't think we're high probability to go down in a big way. If we do get that correction, I'm loading up the boat. I'm just waiting for the opportunity. There's no high probability up or down. But if we do the pullback, I'm ready. And this one looks like three-wave retrace going right here. 1, 2, 3. We're probably heading right back down right there. That looks like we're coming right down in there. Dollar. Ooh. Tried to push lower yesterday. Didn't make it. We bounce again. Maybe. That's interesting. Tried to push lower. Couldn't do it so far. We may bounce up again. Cost. Stuff actually moving today. Cost, look at that baby go. Target is right up there at 665. HYT. Ha! Well, dang. That's a double dip trade right there. Hit my target. Maybe saying, what's a double dip trade? Check this out. Look at the dividend yield on this baby. 10%. Plus, we just made that big crazy move right there. So the first dip is the price appreciation. Second dip is the dividend yield. That was 5% and 15. Yeah, pretty good move. I just played these with shares. So that was maybe go for the extension on that one. That was pretty sweet. All right. That was a pretty sweet one. I mean, look at that. Hard to argue with that, right? Same pattern. That's a high yield thing, too. I mean, I haven't adjusted for the dividend. And I'm going to go for 962 now, I think. 960. Pretty sweet. Anyway, ATAK. Ugh. What the heck? What the heck is that? Is that a SPAC? It's got to be a SPAC, right? Acquisition Corp. Gnarly. FSLR. Right up to the roadmap line. On the daily. Now what do we do? That was a prior high. Draw a crooked line. So, all right. That's bearish. Still bearish. Till we get above this, still bearish. All right. Still bearish in EMPH. I don't care if we're rallying a little bit or not on these alternative energy, green, whatever things. They're all still bearish. Yeah. HYT's div was yesterday, but it's still popping today. I mean, look, div date, and it still pops. Whatever. Craziness. ILMN, still bearish. I don't care the pop. Baidu, I am optimistic that we're going to break through this zone and go up in this area, if not much, much bigger. This has a nested, it's like a triple nested pattern at this point. For a potentially bullish move, it's going to be kind of disappointing if it just wrecks it. Got to get above 130 for the confirmation. Otherwise, anything else it does is just farting around. We get lower than here, though, this thing's starting to be wrecked. So below 101, kind of starts sucking up this pattern. Could we go a little lower and still hold it? Yeah, but it starts looking stupid. So look, we hit and held the 618 back here, right there. We rallied, bounced off the roadmap line, held the 618 here. If we can rally through, that's bullish, but they can still fail. I mean, these things are not 100%. They're still like 30% failure rate. So it's a nice setup. I'll probably make a crap ton of money if it works, but there's another SPAC. GE, target 124, just doing his thing. Baba, holy moly, that looks bad. That's holding on to the last possible support area. We get below that, probably flushing. This one really got to get out of here. Like that's gotta quit churning the bottom here. First move down, retrace. I'm not convinced that's found support yet. The Chinese Communist Party want to break it up into 7 companies or whatever. I don't know. Cold. Came off the high. Oh man, look at that. So close. That's one that worked, even though it's an ultra. I mean, that's a leveraged. Be careful on leverage. Let's see, NG1 exclamation point. Let's see where we're at. Where we're at. Just move that alert. Right back to the breakdown line. Could push down to the bottom. Be careful. Oh, let's see. Yeah, Elliott wave is kind of like the basis of everything. So, all right. So, Elliott wave. Do you want to be a wave counter? Do you always want to know where we are, or do you just want to look for the high probability setups in Elliott wave? After I spent almost 5 years looking for, trying to always know where we were in a count, at some point, you just zoom out and you go, you know what? That thing's in a correction. I don't want to mess with that. There's not good opportunities for me when we're doing this. Like, sure, you can make money on the downside, but when the market's going up, why do you want to be trading down? On average, the S&P 500 goes up, 8% a year. On average, when we zoom out, we really, go to high time frame. I mean, look at that Why do you want to bet against that? If 90% of the stuff follows that, why do you want to bet against that? You can see I've been doing charting all the way back here. My targets don't just come from the current stuff. So why do you want to bet short? Now that also looks like an epic, straight up exponential chart. You know what exponential charts do eventually. Come right back down. That's why it wouldn't surprise me if we saw a greater depression in the 2030s. Possibly starting off later in the 2020s. 100-year cycle. Just saying. Put it on a log scale. Hey, just constantly going up. Keep your time frame in perspective. Keep your plan in perspective, all right? So I use Elliott Wave. It's kind of the basis of what I'm doing, but I don't have to know what count we're in. I've decided that's just not effective for me making money. Effective for me making money is to run through a giant list of these tickers and find stuff that's moving and see if it matches my pattern. Baidu matches one of those patterns. I've plunked down my risk. If it pays out, we're going to go from about 100 to up to near 300. Possibly higher. Other ones that are kind of set up that way. Like Mara. I've got my spot. I got like 200 and something $1,000 on this one. It has a outsized potential. Do I think it's going to 2,000? No, not really. My spot is actually 120. The last high was 82. 120 doesn't actually feel that high. All right. Another one that outsized opportunity. I bought this at $1. I think it's possible we go to 30. Look where the prior high was. 29. Is 30 that crazy? Seems like it when we're at 3. When you zoom out the chart, it supports a nested setup to go to 30. The prior high was 30. That's a reasonable opportunity. When I look at this one, I don't see that opportunity. I see the potential to go lower, and that's not what I'm messing with. Cold, that one worked. But when you look at natural gas, it looks kind of crap. That chart looks crap. I mean, that's that whole, look, exponential up, right back down. Could it go lower? Yeah. Is it likely to go below, negative? Probably not. It's been here once, been here twice. Can we come back to the low again? Sure. Everybody thought it was impossible for oil to go negative. It did. Briefly. mRNA, still bearish. There's another one. Look. Exponential up, exponential right back down. Could that be all it needs to retrace? It could. Could we go a little lower? Yeah. If we start breaking down below 23, we're probably going on down. If they outlaw mRNA vaccines, watch out. This thing's probably going to 0. I don't mess with FDA stuff. I'm just not my expertise. Not in the med tech junk. This one pretty much hitting targets at this area here. When we do it non-log, it hit the target. When we do it log scale, which I usually use for stuff over $50, we're still just shy of hitting that 616, 610 area. We got really close. 599, 598. I can't see that. It's right there. That candle. Got really close. I mean, to me, that's close. freaking darn close. I booked the profit. I got off of this one because huge risk for pullbacks. Now, what's likely to happen again? Look what happened last time. We got to targets. Maybe like, I don't know, JT. I don't see it. Look, right here was the pullback. Right to the roadmap line. We held it. Took a little while. Then we popped. We popped right on up to the 272. That was crazy. Didn't even slow down at the 1618. All the way out to the 272. Stopped on the money. Retrace. All the way right back down here to the roadmap line. Again, same pattern. Why do I use the roadmap line? It's a fib number EMA thing based on Elliott wave. Retraced right back to the roadmap line. And we're going again. And we got to the 1272. Stopped there for a couple days. Popping almost up to the 1618. If we stop up there, watch out. We may come back to the roadmap line. Where would that be? Well, it keeps creeping up. The thing about an EMA. Could be in the zone. Oh, moving the fibs instead of the oval. Could we come back down? Sure as blank we can. Could we keep going up? Yeah, we could reach the 272 again. It's where we hit last time. That'd be 816. Is that too crazy? Not really. We were up there before. Now, interestingly enough, MSTR made its high in February 21, while Bitcoin made its high in November of 21, and MSTR made a much lower high. We made 1290-ish, and here we only made 879. So it was already in a correction. And exponential up, exponential almost all the way back down. Going again. Cool, Mary. There you go. INH. I appreciate that. Vote of confidence. Golly. Nasty. Two candles? 2 candles doesn't make a chart. Sorry. I mean, we could go down to like a 15-minute and you got, that looks corrective. Probably going lower. Back to this one. Sideways choppy. Don't get involved in this stuff. Wait till it's trending. That's sideways to down. All right. See just turn your mind off of the candles for a minute and look at that roadmap line. Could this be a reversal? Yeah. Are we below resistance? Yeah. Just wait. I mean, there's plenty of good stuff. Don't chase stuff that's marginal. Can you make a bunch of money on marginal stuff? Yeah. But is it a gamble? A risk? Yeah. And that one right up to the 1618. Could it go higher? Yeah. 171. Could it retrace back to the roadmap line? Yeah. Pattern says highly likely that we get some kind of retrace after doing that. Crazy moves. What we do last time? Go look at it. We came all the way up to the 2618. Where would that be this time? It'd be up here around 182. So could we go to 182? Yeah, we could. So you got $30 upside versus $30 a downside. That seems like a coin flip. I'd rather wait till we got the pullback and then hunt for the entry. Nail, getting crazy too. And that's crazy straight up. TSCO. And talk about a chart that looks gnarly. Look at that. It's just been sideways correcting since we topped out in December 21. Made a little higher high and retraced it back off. That was the move up. That was the retrace. That was the 618. Could this be a breakout? Yeah, I'd probably wait till it broke above 230. If you were going to give this a shot. The move up, retrace the 618. Breakout here, 270, 300, possibly. Possibly this is a measured bounce. And we'd be looking 279, 312. Roku. You gotta watch this. If we break below that orange, we're probably going down here. Right up at the 1272. Time for a retrace. I mean, that was one big freaking move up. Went from 55 up to 100. Time for a retrace. More than likely. I mean, could we pop it again? Yeah. Watch that support. Watch those prior highs. We get below them. Coming down back in the 80 area. AADI. Biotech, pharma. Be careful. Below the roadmap line. In a downtrend. And when you look at it, they're losing a bunch of money. Labu. Bullish on biotech. I mean, talk about playing with fire right here. I mean, not only is it leverage, but it's also biotech. Could this break out and go? Sure. Does that look pretty bad so far? Sure. There's a chance it breaks out. Clay. Man, bunch of SPACs on here today. Something must have gone wrong. Big drop. DRI. Almost back to the roadmap line. That move up. It really could use a bigger retrace than that. We got down in this area, we'd be set up to go higher. Look, this is like a nested move up, retrace. It's like this is an Elliott wave pattern. 618 retrace, move up. If we did a nested 618 retrace, then break out above there, here, the potential would be for a long-term trade up into this 250 area. Up in that zone. EDU. Just chugging on up. This one's not doing pullbacks, so probably going back up in that zone to test that area where we consolidated a little bit on the way down. Consolidated before and topped out there before. DPST. Caution. I'm not sure it's a breakout, Goose. It may be a fake out. We'll see. We'll see what this turns into here. That one, KRE. FAS. FAS is the only one that looks good out of those three. But it's still got resistance up above us. I'm watching this. I want to get into this one. I've got big, ambitious targets if we, I mean, talking like 900. But we got to get out of the 9D area. Coin, the risk is for a pullback. Limited upside, bigger potential for pullback. Please be careful. SGRY. I got off a coin. Like I was in coin from back at 60, 50, 60. I think I bought the 60 at when we were at 50, $60 calls. And I jumped off because the upside was limited. I was running out of time. I bought January next year. And the risk to another pullback that I wouldn't survive with my calls, like it was going to eat my value a lot and the potential downside. So risk versus reward. Limited upside versus risking all the money, risking all the profit. So SGRY, another med tech, biotech, farm tech, pharma tech, not farm tech, pharma tech, hospital nursing, FDA is involved. Be careful. I just mark it all biotech. And bias for the day. Like, if I've ever been cautious, now I am super duper duper cautious. After hitting essentially hitting the target, what do I expect? A minimum retrace to the breakout point. Could we turn sideways for a week, 2 weeks? Sure. And then pop. So that's the standard patterns. Pattern A. Pattern B. Pattern C is a deeper retrace. Or pattern D, hold for a couple days and pop. There's your choices, all right? Where's the 3% pullback? Maybe. Maybe it happens up here. Maybe we happen here. Maybe we get the 5% pullback. Maybe it happens from over here. All right. That Muku, don't misconstrue what I've said in the past. The lowest, we don't typically make a weekly low on a Friday. Just moving lower on Friday doesn't necessarily mean we're going lower Monday. We don't make the lowest low for the week on a Friday without usually going lower on Monday, Tuesday. It's like 90% of the time. So we're not in a position where we're looking lower right now. We're up here. So even pulling back, we could go higher Monday. If we were looking at, like, we were trending down today and we get below anything we've had this week, we'll probably continue Monday or Tuesday and make a lower low. So if we get a big down today and it's like the lowest low of the week, watch out for next week. But right now, that doesn't look very likely. So there you go. The numbers that came in, we can look at them. And manufacturing, light, services came in positive. So add a little extra volatility to it, but looks like it's, the trend looks to be improving. We had the low back here in December a year ago. Trend seems to be improving. We may go positive. You see, look, I mean, see how it kind of oscillates in these patterns where it runs and then comes back down, goes negative. Looks like we're about to, we're working on going positive again sometime next year. So even though each read can be surprising, we do tend to oscillate and then flow. Anyway, that's what I see out of the numbers. And that's what I see we look at the Empire State Manufacturing up here that we were talking about earlier. When we zoom it out, look, I mean, it oscillates. Goes negative, comes back positive, goes back negative, positive. But on the bigger, it's going down, goes negative, comes back up, goes back negative, shot back up, shot back down. And we got some volatility in here. And it looks like they're cooking the numbers when it gets real staticky like that, but you can kind of see follow the peaks and the dips. And if you don't see the patterns, that's why you're here, right? Following somebody that can, somebody that does. All right. And this is all economic news. The economy is not the stock market. The stock market's not the economy. They kind of fly in a similar pattern, but neither one really truly affects the other. So be careful out there. The account you save may be your own. I'll be back live here at 11, like 50 minutes on Zoom. I can grab the link for those that might want to come. I'm going to talk about my indicator that gives entries and exits. Let me see if I can find the link here really quickly before I wrap her up. Buttercup. Let's see. And I'm going to have to type this in because it's all stupid. And copy. And where did the chat window go? There it is. And be http://zoom.us/j/ don't need a W in there. Zoom.us, and I'm not sure what happened, but let's see if this works. There you go. And try that. I'll be live in about 50 minutes. I think it's already open, so if you wanted to go join it, I'll be in there in a little bit. And there you go. If I said anything, give me a thumbs up, and thanks for watching. I'll see you guys later. If you want to come watch me, cool. If not, be back later.